Will Bridges here from 123 Trade. We're just about ready to get the ball rolling here this morning. Had a very exciting week. The non-farm payroll announcement just came out about 30 minutes ago. We're looking at kind of a mixed bag, but the unemployment rate did come down. Not a whole lot of people trust that number anymore. Just based on the way that it's calculated, it's really talking about people that may not be eligible for unemployment anymore, or just not considered unemployed anymore, which is kind of weird. But also Bitcoin seems to be, Elon Musk seems to be breaking up with Bitcoin. He put a nice meme out. Looks like, I don't know, last night, evening time, 11, 12 hours ago. I'll show all that stuff in here today. But I just want to make sure we've got everything set up here. You guys can hear, you guys can see the screen. You guys should be looking at the welcome screen right now with the play button. If you guys can, just give me a quick Y or an N in the chat box. Let me know you're alive. We'll get this thing going. We should be recording. We are. Perfect. Appreciate that, Edward. Thanks, everybody, for coming out. Antonio, Colin, Gabe, Jan, Manuel, Nadine, Sam, Sharon. Lots of familiar names in here this week. Let's go ahead and get this thing going. First things first, we got to knock out, our requirements, Everything in this presentation is going to be for educational purpose. You guys do with the information what you choose. What this says, it says that if you put your money in the Forex or any market, then your capital is at risk. As I like to say it, you do have to risk it to get the biscuit, folks. There is no such thing as a guaranteed trade or a guaranteed win. All you can manage is your risk. And that is what we are here to talk about today. So let's get this show on the road. If you have questions, there's a little orange button on the control panel. If you can't see the control panel to get in the chat box, you need to click on that little orange arrow, and that'll open everything up. That way you'll actually be able to see. Let me just see if I can take a quick screenshot real quick, just show you guys what this looks like. Because if you can't see it, then it's very frustrating to have a question and not be able to answer one. And I feel like I haven't shown this in here. But where did my snipping tool go? Maybe it's not going to let me use that right now. Oh, here it is. But yes, this is what this thing looks like. Okay, so this is the orange button that I'm talking about. If you have a question, then by all means, click on that button. It'll pop out this screen, and then you see where it says chat down here. That's really where you want to go to ask questions. If you're on a phone, it's right at the bottom of the phone. It's I think a question mark button on a phone if you have a question. But please, 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 if you have questions, do not let me run you over in this session. I know we have people of all different skill levels in here. We're going to go through a lot of stuff. Okay. Some of you may be familiar with who we are. Some of you might have just signed up through a friend. That seems to happen a lot more as time goes on, which is not a bad thing, but I want you guys to know who we are and what we're going to help you do. Okay, so first thing we want to do is help you get a regulated, secure broker, and we've already done that. That's how you ended up here. We also provide a lot of guidance and mentorship. We want to make sure you understand how to use the amazing tools that you have access to and how to apply them to something that you might be able to make money with. That's kind of the whole point of the trading thing and having the account to begin with. So we want to help push you over the finish line on that. We want to help you with, charting connection and setup. We want to make sure you guys don't get stuck on some technological step that just keeps you from getting to the next level. Everybody's at a different point in their trading. People get stuck at certain points in their journey towards success. And sometimes they're relatively easy to solve. Sometimes they're not. Usually it's the emotional problems that are the toughest to solve. We're going to talk about that today too, and what causes traders to be emotional. But we're going to go through a lot of weekly training and analysis in this room. If you guys have a particular topic that you want discussed in this trading session, then by all means, light me up in the Facebook group during the week or in the Discord server. If you guys are not part of the Discord server or the Facebook group, you're going to want to join those because that's where we post these videos. That's where we post the trade setups that we find in here. That's where we post pretty much everything. I blog in here also. So if you do not have this link, I'm going to go ahead and share this in the chat. This is for the Discord server. You can get this as an app on your phone. It's free. That way you don't have to get a million notifications from everything that happens on Facebook all day. Although I know some of you are already on Facebook, so we have that too, just to make sure we take care of everybody. And I'll go ahead and share the Facebook link here as well for those of you that don't have it. And at this point, our website also does a lot of what we used to do in other places. We used to go through everything that's on this list here, you know, how to place your first trade, all that type of fun stuff. All that was right here. At this point, you know, I don't think it's worth it everybody's time to go through this every week in this session. You know, I'd rather spend, you know, the time we have here going through, you know, big market opportunities. That's really kind of the whole point. But our website, and I'll share this link with everybody, does have our YouTube channel, and it should be pulling in videos. There should be lots more. I think I'm going to be launching 2 videos today, one being this session and another from Aaron Hunziker on how to trade with Fibonacci's. So all that stuff does come to our website. This is also going to show, you know, if you go to, you know, premium, if you guys are thinking about adding money to your account, for example, then you might be able to get some free stuff. So just let us know. Send us an email to brokers@123trade.com, and we'll help you get whatever access it is that you qualify for. So if you guys are interested in that, just want to let you know I'm not here to sell you guys this stuff. That's literally if you're going to add money to your account, we're going to help you get some more free education and tools because we want to hook you up. But we had a big morning. Let's go ahead and get the show started. Let's go ahead and get this thing on the road. Okay, so it's been a big week. I'm going to go ahead and dump all the medium announcements. This is forexfactory.com. I use a couple of different economic calendars. I use this one in DailyFX. I think DailyFX actually sometimes will have forecasts for what's expected to happen sooner than Forex Factory might, but I just generally like the way Forex Factory is laid out because it's really easy to get a lot of information quick. So if I want to get information about, say I want to read news about the unemployment rate that just came out, there's already some attached here, and lots of it from 47 minutes ago. Okay, so, you know, all the historic data, so you can go back and see, you know, in May of 2020, we had a 14.7% unemployment rate. Disgusting. Especially considering if you go down a little further here, 3.5% is the lowest in 50 years. Okay, so right now we're back to 5.8%, so that is a good sign. We did not quite hit the forecasted number, okay? If this is red, it means we didn't hit the forecasted number of how many jobs they anticipated to be created last month. They did revise up last month's number by 12,000 jobs. So that's positive, but 12,000 jobs in the United States, there's 300 million people. They were expecting 990,000 last month. They still missed the mark by, you know, 720,000 jobs last month. And then we missed it this month by 100 and, I don't know, I guess maybe 90 something. Regardless, you know, that is an encouraging number because it is not negative. Canada, on the other hand, did have a lowered number of jobs created. Actually, I guess jobs lost last month. Unemployment rate actually went up as well. That was expected. So not sure if that's a seasonal thing or what's going on there. But oil is going up, so I'm anticipating some strength from the CAD anyways. And we've been talking about that for a while. Let's go ahead and get the charts on here. Just want to give you guys an idea of what actually happened with the non-farm payroll announcement. If you don't know what the non-farm payroll announcement is, please, please, please type in the chat box. What is the non-farm? It is the U.S. jobs report, and all jobs created that are not farm related. So this is the chart for Bitcoin. We actually set this pending order last week at this blue line here. So I think we entered into this. I'll go ahead and pull up the active stuff. It does look like we're up an obnoxious number of pips because of this Bitcoin trade is 15,000 pips up, which is, I don't know how they calculate pips on Bitcoin, but that's kind of unreasonable. So what we're looking at here now, okay, is a very bullish or bearish market, excuse me, on Bitcoin. So I want to go ahead and show you guys. Figured I might start hot on this one just because there's so much good news about this one right now to talk about. Okay, you guys have a big province opening. There was a lockdown in June still? You guys are still doing lockdowns up there. It's crazy. I don't know. I live in Florida, so I feel like I live on Mars lately Because when I read about lockdowns, it's confusing. Like I can go to the grocery store I can go anywhere in the world without a mask on near my house, and no one's going to say a word. Most people don't have masks on. It's not like I'm some kind of, rebel fighting a cause here. It's just weird how different things are everywhere in the world lately. There's just too much news to read. But, the fun news that I like to read is the stuff that I can try to make money with. Okay, and I saw this morning. I thought this was interesting. This is Elon Musk's Twitter. Okay. If you guys are familiar with Elon, one of the richest people alive, guy that owns Tesla, SpaceX, everybody loves Elon. And, earlier this year, Elon came out and said he was going to buy $1.5 billion worth of Bitcoin, and they were going to start accepting Bitcoin payments for Tesla vehicles. Absolutely ground shattering. That's what put Bitcoin to 60,000. And then he came back and changed his mind and got out of his Bitcoin position. It was the most epic pump and dump that I have ever seen in ever. I can't imagine a bigger one. $1.5 billion pump and dump is pretty intense. And at this point, he's sending out these memes that are hashtag Bitcoin and a broken heart. And this meme here, I know I said it would be over between us if you quoted another Linkin Park song, but I found someone else. So in the end, it didn't even matter. So what my guess might be, is that this is very likely a pump for Dogecoin and really a dog on Bitcoin. I think that Bitcoin is going to absolutely take a beating. I think really crypto in general is going to take a beating if people like Elon come out and they break up with Bitcoin publicly. He's changing his relationship status with Bitcoin on Twitter, which I think is absolutely ridiculous that the world has come to things like this, but I still want to get paid. And that's what this is all about. So this is our trade that we had set up on Bitcoin. I'm going to go ahead and show you guys why we are short on Bitcoin and why we were before. We were waiting for this trade. We were sitting at this line like a surfer at the sandbar waiting for a wave. Okay, so I'm going to go ahead and get rid of our existing open orders that are on this chart so that you guys don't get confused by these lines that are here. And let's go ahead and take a look at this. I don't know if you guys can see this big move right here. This is an evening star if I've ever seen one. Okay, and an evening star means the sun is going down. That's what an evening star pattern means. And what I'm getting at with that is that this is basically a bearish spinning top up top here, and then we have this bearish engulfing candle that broke this level. Okay, that level got broke, and actually I'll make that a little bit more obvious with a ray, because really it's this price down here that I'm talking about that broke. Okay, so we overcame that low with this really bearish candle. So there's a chance the market comes back up when we see a little bit of a, continuation of trend. That may or may not happen. Okay, there's a joke I like to make all the time in here that I'm never wrong, I'm just early. And early, you might be early by 10 years sometimes. That is kind of the joke. But as far as Bitcoin goes, okay, we've been up for the last, week and a half. Okay, so this is a really slight gain that we've got here. We are very adamantly down. This thing has fallen from a high of 63,000 up here and already touched this low of, just 30,000. That's a big swing. That definitely does not sound bullish to me. If the dollar went to 50 cents in the next couple of months, I would probably be pretty concerned. Okay, kind of feels like that might be happening all over the world for some people. But let's go ahead and go down to our daily time frame here. Okay, let's keep working our way down here. And what a lot of traders are going to look to do is maybe try to hope and pray that this thing comes back up top. Okay, no real gospel in what happens. There's really no way to know for sure. But I know that one of the richest people on earth just told everybody he's not going to be trading Bitcoin anymore, and he's switching to another cryptocurrency. So I'm looking at this shape down here. We might get some confirmation of a very large move if this thing breaks out heavy to the south. Looks like it tried to break out of this little pennant. Let's come down to the 4 hour, get a closer look at this. As we are consolidating heavily, the market's going to make a decision soon. Okay, so what that means to me, since we already busted this pivot here, that's what this green line is. When I say we busted this pivot, as we moved past it, we broke that low. Okay, the market was having a tough time getting past that price, this green line that I drew up here. You know, we couldn't get lower there, we couldn't get lower there, we couldn't do it there, but then we did it hours later right here. Okay, that's when we broke that price. So more than likely, the market is going to be looking for, well, some lower lows, because that's what it's been doing for the last, well, since the middle of April. It's been looking for lower highs and lower lows. And to show you guys what I mean, I'll get rid of this stuff that's here, and I'll make that more obvious, because most traders have a very difficult time figuring out what trend direction is. And these are highs, and they're all much lower. This is a lower one. Here's an even lower one. So this thing is making lower highs consistently. I'm not going to expect to see higher highs. I'm going to keep expecting lower highs, because that's what it's been doing. Here's a low, here's a lower one, and here's a lower one. So maybe we get to see one some down here soon, somewhere down there soon. But the thing that I want to do, I don't want to speculate how far this might go. We'll just, by drawing a circle like that, I'm going to go ahead and use my Fibonacci tool for something like that. Oop, missed the top. There we go. That way we could see where we are in the wave, how far this thing is likely to extend. Okay, so it doesn't want to come down. There are a lot of Bitcoin bulls out there, but, well, there's a lot of people that are very vehement followers of the church of Elon Musk. And, you know, I also notice a couple of broken counter trend lines here that I want to make blatantly obvious for you guys. Okay, there's a break there. Here's another one right here. That looks more steep. Okay, so the market is moving more sideways recently. Usually that means it's bottled up and it's going to try to make a big move. This sideways move that happens, you know, the market really often likes to go as far down as it did sideways. So that could be up or down. Kind of depends on where we break out of that pennant that we just saw. But, you know, really lots of different strategies, lots of different patterns you could use. I'm going to lean on the fact that this thing has been falling. The biggest pushers on the planet are backing out. And that's kind of a signal, I think, in my brain, to just keep doing what's been happening until it stops working. You know, when selling on this stops working, I'll stop selling it for a little bit. Because, you know, really, I want to trade with the trend. And that's really what this is all about. It could go a lot more sideways. This thing's going to move all weekend. That's the cool part about crypto, is that there will be movement. And it will continue Saturday, Sunday, 7 days a week, which is really the amazing part about this. Okay, so what we are looking at, and the part that we are actually trying to take advantage of, okay, and what I might look for in this scenario, if you're not already in this trade, okay, I'm going to go ahead and draw a quick place where I might put my stop loss. We've got a couple previous highs here. Okay, I may use this one. I may use the closer one. We'll take a look at what our risk reward ratio is. It looks like we made it to our blue level above, so I'm going to expect my blue extension at the bottom. I'm going to make this line green, because that's what I like to make my take profit. I want it to look obvious where I want to rip tape on life and potentially win this trade. And I'm going to make the current market price blue here. And the important part to understand is, what is my risk reward? Okay, so in this particular situation now, okay, if we zoom in here, let's go maybe to our 1 hour time frame. Okay, so we just worked our way all the way down to this 1 hour time frame. And, you know, if I want to make sure that I don't get stopped out, what I like to do most often is get out of the AB boundary. So if I can get out of this AB boundary, which is this big shaded area, and still have an equitable trade, that's really the best thing for me to do. And what I'm expecting on this trade, there's a couple of different ways you could enter right now. Some traders are going to enter immediately. Some traders are going to enter at a slightly higher price, like here, okay, because that was a critical turnaround point for the market several times. And a lot of people look for what's called the 1, 2, 3 strategy when you break a trend line, like I'm showing here. So this is the one move, okay, that's the break. Okay, we made a lower low, on the other side of the trend line, now you expect a test, and then I might expect a continuation. Okay, so that's what I am looking for. So maybe I don't get in right away. Maybe I look to start selling this thing at 37.5, kind of like what we did last week, because last week we got in at a slightly higher price than it's at right now. We actually started becoming sellers here up at, let's see, it'd be this price here. Oop. Let me get a horizontal line on here. This is where we sold it last week. Okay, we plan to sell it from that price. I think that anywhere in that zone is a great place to get good risk reward, and we don't necessarily have to be this high. There's a couple of extra highs that are closer than that, because this risk reward ratio is not the best. And that's really the most important part, is can I manage the risk? Okay, so at this point, I've got a new entry that's a little bit lower than the previous. I'll go ahead and take a picture of this. You cannot place this trade in Smart Trader. Well, you can, you just can't follow it in here. Okay, so what's going to happen is I'm going to open this up. I'll show you guys how this works. I actually can place this in here directly. This one is going to work perfectly square. I guess it's just the metals that are going to be that way. But if I wanted to trade this in here, I just have to type in all the values. Okay, 0.1 is a big position here. Okay, so 0.01 is small. If you have less than $500 in your account, or $1,000, this is probably not a great idea for you, unless you're using a smaller stop loss and you're going to trade this on a smaller time frame. Well, let's just say you're going to take smaller risk, because that's really what you're going to need in this situation. So if you're going to try to scalp this, for example, some of you may actually, before I do this, I'm going to go ahead and take a quick pick. I hadn't clicked that yet. But some of you may want to try to trim down the risk, because 44,000 is pretty far away, which is why I'm there, because I don't want to get stopped out, and I think that the long-term trend is down. Some of you may do something like this, because the trend already broke, and you may trade this a lot tighter, okay? I'm not necessarily, in a position where I think that that has to be that way, but the reality of the situation is this is still a big move. You're talking about a $4,000 swing on, well, $3,800 swing on Bitcoin, and really it only has to come up, I don't know, $750 to put us in. That happens all the time on Bitcoin, which is absolutely crazy. But we might as well go ahead and show that one, because that's a sideways move, and that one is actually a lot more likely to hit than our further away target, which is actually why I reeled in last time as well. So if I wanted to set up this current opportunity, I need to get a stop loss value in here of 39,553, okay? And my limit down here, 33,744. Okay, so now I can just click sell, okay. It's going to ask me, oh, maybe not, did not. I've already placed trades through here, I guess. So that was just me being forgetful. But anyways, Bitcoin, I think, is going to be a dog for a little while, and I think Dogecoin is probably going to be fairly interesting. But we've got lots of other trades open here. I want to go ahead and show you guys everything we've got in the dollar right now, because we did have non-farm payroll come out this morning. We are looking solid on our pound USD buy here. We are looking solid on our crude oil buy. I might as well, I'll pull that up here after we go through a couple dollars. What I want to do is make sure that our Aussie and our New Zealand pairs are not in a situation that I want to adjust and maybe take more entries, because we are 50 pips under, and it may just be a better time for me to get in than it was before. And it does look like, let me get to the high time frame here. I'm going to go to the month. First, I'm going to crunch this chart down. I want the whole world in my hands. Okay. And what we're going to look at here, first, I'm just going to draw some structure on this market. I want to know where the market picks up, leaves, and goes the other way for 10 years. I want to see where the divorces happen. I don't want to see you until the 2030s. That's really what I want for this chart and this time frame, is to figure out where the absolute boundaries are on this thing. And we don't have a line that's close to where we are now, so I can't really place a trade with what I've got already. So now I want to look for big counter trend moves, because both of my lines on the outside, my structure, both of these trends are up. Okay, so I want to look for downtrend lines such as this one. Okay, so I can figure out what the pattern is on this thing all time. And this is really what I think is happening. Okay, so very much a situation where we broke this downtrend line. We actually hit some, I think, 17-year lows in the process, and this is actually a higher line than this. We are just above that line now. Okay, so let's come down to our weekly time frame. Just want to make sure we were lined up properly on here, and we are. Okay, so we are above our broken counter trend line, and a lot of traders are thinking this is the top. It's gotta come down. There's no way this thing can continue. And that's not true. It can do whatever it wants to do. And really, that's kind of dependent on what the US government wants to do. It's the biggest economy on earth. If they want to have a more expensive Aussie dollar, then they can make that choice. That's pretty much how money works. This is a supply-driven game lately, and it has been for 50 years. So I say lately, but it really has been that way for a long time. This is not new. Okay? And a lot of people, I'm going to get rid of this counter trend line break because I just proved to myself that I think this is this is going to be a long-term uptrend, potentially for a decade. Okay, as far as I'm concerned, this could be an uptrend for a decade. Obviously, it's going to come up and down in the process, but my job as a trader is to try to trade with the trend and manage my risk. So I want to figure out where I can get in and do that. We're already in this position now. Okay, so I want to show you guys a lot of places where traders got faked out over the course of the last year because they didn't look at the monthly time frame like I just did first there. Okay, so here's a trend line break that happened. The market went up a lot after that. Okay, here's another one that happened. The market went up a lot after that. Okay, here's another one that happened. The market went up a lot after that. Okay, here's another trend line break that happened. This was the most promising one that we saw, and really the biggest fake out. Broke every trader's ankles on this one, and the market went up a lot more. And then it happened again over here. Okay, so this was our new trend. That broke. The market went up a lot more. You guys get the idea. That's what the pattern has been, is that we break this uptrend line and the market moves up. Okay, so I'm not going to look at this like, oh yes, this is coming down. I've already decided on my higher time frame that we broke a very big trend line that might be sending me north for a decade. Okay, so I'm not going to look for shorts here, especially when everybody's gotten faked out on this every time that this line has broken for the last year. Okay, so my strategy is to find the pattern. Okay, and that's really what this is all about. So now I'm going to come down to my daily time frame. We're going to keep whittling our way down. Okay, because I want to know if I can manage my risk. We're already in this trade. Okay, so it may not make sense to buy it again. However, from a standpoint of the fact that we are down 50 pips, we've made 3 pips since I started talking. I may just load in another position on this just because it's a lower price and I think it's going to continue up. Okay, so that's kind of up to you guys as traders, what you want to do with that. I'm going to show how I may find that position real quick, and then we're going to move on. The same situation is likely happening on the NZD as we're seeing on the AUD. So the New Zealand dollar, Australian dollar, those are going to behave very similarly because they stay in a very tight range together. That pair has been sideways for the last 6 years, and that may never change just because they do tons of business together. Okay, so as of right now, we are at the edge of this AB boundary. We've already broken out of it. What we're aiming towards right now is this extension level above that green line that you just saw me draw there. Current market price will make this one blue. And I'll get a stop loss in here as well. And if you guys have questions, we've got a quiet crowd in here today. If you guys have questions, stop me. I know I'm trying to go slow. I'm trying to make sure I'm as thorough as I can be with all this analysis, but that's a pretty amazing risk-reward ratio, and we haven't been below this price since December. Okay, so I think a great opportunity at 77 cents right now to try to take the Aussie to 83 cents. That's a 600 pip move. Okay, so maybe we load in at this lower price. What's our other lot size here? Actually, you know what? We'll just figure out how much this one costs. I'll help you guys figure out the risk-reward ratio stuff because everybody needs to understand equity management. Doesn't matter what I put in this box for you. Okay, you can put as much money or into this trade as you want. That could be zero. That's totally up to you. Okay, I'm just trying to show you guys an idea. Isn't that a 90% retracement back to the 382? Well, let's come back to the daily. Hold on. You're talking about the odds that we come back to this 236 here is what you're talking about. The 382 is an 80% line. That'd be down here. With that being said, I mean, it really kind of, there's multiple schools of thought on this, but we're super bullish. So realistically speaking, we've already come down and tried to tap our 236 and we couldn't even get there. There's also another invisible level in here called the 114. And I mean, I can add that one manually, I think. I don't know if I can do that on the auto tool. Let me see settings here. Levels. I guess I can't add that one. It's not used often because it's very it's very aggressive. But this trend has been very aggressive, Richard. So I appreciate you pointing that out. Some traders are going to take this south. Some people are going to take this north. It's really just about managing the risk. If I'm wrong on this trade, I need to be right on, I don't know, 3 or 4 out of the next 10. So it's really about the risk reward. And I want to follow the trend. Some people are going to go counter trend here. I don't think that's necessarily what I want to do. Reality is the market's did something similar here on the last wave. If we look down at the bottom of this AB boundary, we came to our 236 just about and then took off. It's already kind of done that here, just to show what we're talking about, which is why I'm looking up. Well, one of many reasons why I'm looking it up. Primarily because I know that supply of money is going up heavily, and I know we're planning a massive budget, the biggest ever here, it feels like. Well, the biggest since World War II versus our GDP, which is, well, fairly telling that taxes are going to come up in the United States. A lot of things are going to happen here that are not going to be good for the strength of the dollar. Okay, so that being said, I'm long. I'm going to stay long for a long time. And hey, if I lose, I lose. I'll get in again. But yes, as far as entries, I need my stop loss 0.73663. And I need a limit here as well, 0.83194. Okay, so this risk reward ratio, just to help you guys understand, okay, this is the most important part about every trade you ever place. Okay, this is a 350 pip risk to try to capture 607. So a lot more pips, almost a 2-to-1, not quite, but a lot more pips than I'm planning on risking. I'm planning to make. A 600 pip move is a big move. Okay, this is something that might take a couple of weeks to happen. It could happen Wednesday, next week. There's really no way to know. You know, sometimes this market's going to move 30 pips a day for months and months and months. Sometimes it's going to make a crank for 700 pips. You never know what's going to happen. The government makes an announcement for something and things move. That's pretty much what goes on. So, or they don't make an announcement. They spend, you know, billions of dollars somewhere and then things move and they don't tell anybody about it, but it happened anyway. So I'm going to continue with the trend and what's been happening here. We saw a big dip almost like we saw months ago here. I'm looking for the extension. I'm going to go ahead and click on buy, but really this is a 350 pip risk. So 0.01, this is a, you know, $35 risk. If you wanted to reel this in and maybe trade a shorter time frame on this thing, maybe be a little bit more aggressive with your stop loss, you might tighten this up here and pull this in and do something like that and just look for sideways movement. Okay, so now I'm not necessarily looking for bullish. I'm looking for bullish, but still sideways. So this is a much more conservative aim. I have a much tighter stop. And in this situation, actually, I can have a much narrower risk with less money. Okay, so this is a, you know, half the risk of what we were talking about before. You know, $19 risk and an opportunity for, you know, $26. So not quite as good of a risk reward, but not as big of a risk. So if you're trying to keep all of your trades under $20 or $50 or whatever your number is, the thing to do is to take this lot size up here. If you want to figure out how much money that you're risking, take this lot size. Right now it says 0.01. Multiply that by 10. Okay, so if you multiply that by 10, you're going to get 1. Okay, so now I have 1, and I just need to figure out how many pips that I'm risking. Okay, so at this point, 174 pips. Excuse me, it's 0.1. 0.01 times 10 is 0.1. Okay, so 10% of whatever number of pips that I have here. So $17.4. That's really what this trade became. I'm going to go ahead and enter the bigger one that we were talking about because this is a swing trading room for the most part. And really, this is something that I think I can reload again if the market comes against me. I'm not concerned about this amount. If anything, I want to keep it the same size of the rest of the trades that I've done in here. And I'll go ahead and click on buy at 0.02. Here we go. So I'm expecting something really similar on the NZD. I think we may not be in the euro right now. One thing I do want to stop on here real quick is oil. Crude oil has been very interesting for a lot of reasons. We've really worked hard here in the U.S. to slow down our oil industry all year. It's been really exciting. We haven't quite seen the big jump in gas prices that I'm expecting to happen here soon. Gas is up 80 cents so far this year. I was filling up for under $2 a gallon at the end of last year, and now it's $2.80. So we had made a call on oil. Well, we didn't necessarily make a call. We copied off of Goldman Sachs had told everybody that they think $80 is going to happen. So we wanted to figure out why. Okay, so here's one big reason why I think this is entirely possible. We have a really nice trend line break and a closed monthly candle that never came back inside of it right here. Okay, so this is a very big signal that we're very bullish here. And I don't really need to do much more on this time frame to figure that out, because our low price that's down here, this is on currency crosses. This actually makes more sense to do things this way. This is actually this price is zero, because oil went to negative $17 or something last year during the coronavirus madness, and it's been pretty much up since then. I think the U.S. government bought tons. I can't remember the quantity, but it was huge, somewhere around $30. We filled our government oil reserves at $30. That was a big deal. Trump came on the news and everybody was super happy about that because we were going to save the oil industry, blah, blah, blah. Now we're shutting down the Keystone Pipeline. We already did that, actually. There's another one in Michigan that Whitmer is shutting down, and there's another one in Alaska that we're shutting down. So we're really lowering the supply push from the U.S., and we're pushing a lot of, Europe to buy oil from places like Iran, and we're buying oil from Iran. So it's really getting interesting as far as the oil scene goes, but the truth of the matter is it's going up. And this looks a lot like, pretty much everything against the dollar for the last year. Okay, so I'm going to show you the same thing that I showed you guys on the Australian dollar. Here's the fake outs that happened. There's a trend line break. Okay, the market went up more. Then we had a new trend that happened here. The market went up, and then it fell a little bit. It looked like it was going to be a really nice move back down towards, the $28 range, but that never happened. And now we have this line that we tried to break here recently, and the market's just been moving up. Okay, and then this became the line, and we tried to break it again, and the market's just been moving up. This is our trend line right here. Okay, so I'm still thinking up. I'm a bull on here, and so is Goldman Sachs. Goldman thinks $80, and a lot of people probably want to know how they come about picking prices like that. Part of it's because they probably have some sort of a government connection, and they know that Whitmer's going to go ahead and push us out of this AB boundary. Who knows? Doesn't matter. They called $80. I want to know why. And it's not this fib level. It is the daily chart fib levels, I believe, that lead to this level. Let's go ahead and clear this whole screen out. Pull our ABCD on our daily chart here. Okay. And what we are looking at here, folks, actually, did we miss the first? I think we missed a wave here. Let me make sure I get all of these. There we go. That's what I want. Got to make sure you're all the way at the bottom. Sometimes you'll get a little bit off. And a little bit off does make a big difference sometimes, a couple dollars on that one. Okay, so where Goldman is aiming and where I'm talking about is up here at 79,680. They just came out and said 80 because 80 is, people like round numbers. Okay, so 79.68 sounds like a good price. This actual red line on my fib level here, if you hover over it, it'll tell you what it is. 79.911. Okay, so 9 cents away from 80. You might as well just say the market's going to go to $80. That's what Goldman came out and said. And we've already broken out on our daily, and also, if you guys didn't notice, on our weekly. Okay, so we just broke out of our weekly range here. So this is really telling me we could go even higher. Okay, oil could come all the way up to $89 according to this fib range. I don't think it does that first. Maybe we aim for that later. I think $80, and then we probably get back in again at 75 or something like that. So I'm going to aim for 80. I'm not going to be super greedy on this thing. I'm just going to aim for what Goldman tells me is going to happen, because allegedly they're really good at what they do, and a lot of people give them a lot of their money. Okay, so I am going to go ahead and stick on the side that, hey, they probably know something that most people don't. We've broken out of this range here. As far as oil goes, if I think this thing is going to $79, then I can get a stop loss down here somewhere below this previous low that happened. We'll make this red. And let's go ahead and get current market price on here. Okay, so you may tighten up the stop loss a little bit if you don't want to necessarily come all the way down to this $61 range. I don't think that's going to happen again anyways. There's other turnarounds at higher prices. We've got lots of higher lows actually. So the reality is we have a few, and you could double check yourself here with this smart support tool. Okay, so we have 9 levels of support that it found between where my stop loss is and where the current market price is. So I'm pretty good with that level. If I want to check my work, I've got lots of shields in here. That's what these little black lines are, as I like to think of them. These are support levels. These are higher lows that the market has been making. And the software draws it for me, so I might as well rock them out. And I'm going to look a little bit higher even. I'm going to be even more cavalier about my stop loss because I've got all these other lows. And the market's moving my way. If I want to place this trade, okay, I'm going to go ahead and... Well, actually, you know what? There's got to be a better way to take a picture of this. Let's do this on the 4-hour. Crunch this price down a little bit. All right. And if you do want to place this trade from Smart Trader, you can. If you open up the trading widget window over here on the left, okay, it's going to say non-tradable instrument. Okay, so what you need to come down to on here would be crude oil is what it's called. You just basically have to pick it from the list. Okay, so this is similar to what you would do in MetaTrader 4. You can go place this from MetaTrader 4. If you wanted to place this trade on Brent oil, you could, but I think crude is what I want to find here. There we go, crude oil. Okay, so now it's a tradable instrument. It lights up. A 0.01 is basically like trading a mini lot. Okay, it's not going to move as fast, but a pip is going to be basically $1, I think. If we pull up our active trade that's here, okay, we're in at a 0.01. So I want to show people how this works. We're up 59 pips. Okay, so $59 in gain. So basically a mini lot, but it's going to move slower than a Forex pair in that regard. So that being said, if we are going to risk, I can measure this with my measuring tool over here. This is 461. Okay, so some of you may be more, I'll show more aggressive position on here. So not everyone's going to be willing to risk $461 to make 1,000. Okay, that's what I would want to do, but may not be something that all of you guys are ready to do. So I'm going to show you guys a nearer term position that might make a little bit more sense for your account size. Have you got a take on the Aussie CAD? Oh, Sam, we can talk Aussie CAD. That sounds fun. We can do that. We'll do that one next. No problem at all. But I guess we're done with oil here. Let me actually zoom in here. I wanted to show a scalp opportunity here. So those of you that are short-term traders, those of you that want to do stuff like this, you know, in, out, be done with it type of activity. Okay, I'm going to clear all this stuff out. If I think this is an uptrend, okay, and I do, okay, I may just take this AB from the bottom here, figure out where we are. This might actually be a short-term opportunity for me to try and sell this thing here soon, but I may not want to go that direction. Let's go to slightly higher. Let's go to the 30-minute. Look for a better target. We don't have a good target here. We may, if the market comes down a little bit, this is more of a pending opportunity if you want to scalp. Okay, and the reason why I say that is because, we're fairly close to our extension level above. Okay, and I would need a place to protect my risk as well. So this is not going to be anywhere near as massive of a trade, but not quite as much money at risk, So we're talking about, a $50 risk now instead of $450, and the opportunity up top is $130. Okay, so this is a pending situation. Okay, so not something you would be in immediately, but it is something that I think is fairly likely. And generally, if you wanted to be a little bit less aggressive with the stop loss, you might use this low here as well, just to make sure that you don't get stopped out right before this thing turns around and goes your way. So that being said, I think we've watered down the oil conversation enough. Let's get over to the Aussie CAD. Looks like we had a very aggressive move on the Aussie CAD earlier today. Let's go to the all-time frame first. And let's go ahead and zoom this thing out. Okay, crunch this down. I want to look at what the market does most of the time, all the information I've got. That's what I want to do first. Okay, there's our outer boundary right there. Okay, we have an inner one here as well. Okay, so we've got relatively defined downtrend activity happening on the top side. This is very choppy. This thing goes very sideways for years and years and years. It's turned around at the price it's at now a couple of different times, but we are on a downstroke. So let's see what's going on the bottom of this thing. And this is what our trend was for years. Okay, and then we had a trend change direction there. So we've got closer lines on the inside. Reality, I don't need this one anymore. This is kind of useless at this point because the market has made a little bit of a turn. It looks like we're making a big pennant here. So very likely the market comes down and tests some lower prices, in my opinion, just because we've been at higher prices for quite some time and there's lots of demand at lower ones. Just to show you guys where I'm talking about the middle of this thing might be. Okay, these prices down here, okay, well, people paid those for a long time, so it wouldn't be crazy for them to pay them again, and the market very likely wants to test this range. The reason why I like the rectangle tool so much is because I can show up on this chart, and the rectangle forces me to pick levels that the market has turned around at many times to be able to pick where I put my box. Okay, so what I'm saying is I picked this place for this box because there were big turnarounds at this price. Okay, big price pockets at this price. Okay, this price has been very, very significant many times over the years. So I think it does at least one more time. Heck, there's a lot of demand right here for that price. So let's come down to a lower time frame. Let's hit our weekly. And a lot of people may be thinking, oh man, it's time to start buying. And maybe it is. Maybe it is. Some people already are. Let's get a closer trend line on here. We are thinking down at this point. Actually, let's get all this other junk out of our way. We don't need that anymore. Let's get down to the meat and potatoes of this conversation. Okay, we are under this line. Okay, what that tells me is that this is a downtrend. Another reason why I think that this is a downtrend, we're on a weekly time frame still. Okay, this is a pretty serious trend line break. We've fallen for months and months and months after that. So I think the trend is down until we break this line that I've got on the right. So I don't need this uptrend line. I'm expecting downward moves. That's what I'm going to be looking for. It may not be right now, but I'm less interested in buys. Not to say that I won't buy, but I'm less interested in buys. Okay, so let's zoom in here. Let's get this full screen. Get a little bit more real estate on here. Perfect. Okay, and we'll tighten our line up here. Perfect. All right. And now I want to figure out, is this, it does look a little bit oversold right now. And what I mean by oversold, just if you guys have heard people say that and you don't know what they're talking about, the market moved down quick here. And then it did kind of one of these things at the end. And that's kind of what oversold means. It's that, you know, it's still coming down, but it's doing it slower than it was before. Okay. So that's what a lot of people might be thinking this is doing right now. And maybe it is, maybe it's not. Okay. So I'm going to measure with Fibonacci ratios as well. I want to know where we are in relation to the waves. We've already broken out of wave 3. So we may just be testing the outside of wave 3 right now, and we may be falling sometime very soon. So I'm not thinking buy yet. I am looking at a situation, if the market closes right now, for example, at this price, then, well, I mean, we've got a very nice piercing line pattern that's happening there. So that would be an upward indication. And Canada just had some really bad news come out for unemployment. I'm not sure if everybody was here at the beginning of the presentation. I'll show that again one more time. Let me get rid of this full screen. But this is, you know, the jobs market in Canada. So that's, I guess, product of lockdowns, according to Herb. So this might actually turn around relatively soon. Right now, that bad news might be something that, well, they might be improving this coming month. So there's a good shot that we go the other way, but we might see some upward movement in the meantime. So I want to make sure that I protect my risk here and I don't try to get in too early. So let's go ahead and check this on another time frame too. Let's work our way down to the 4 hour, because we may be looking at more sub ABCD waves. There's going to be more waves on lower time frames, which is why I like to go down to them, because I want to know where conservative is. Okay. I want to know where a price is that, you know, I'm not going to be getting in early, because I've made this joke twice already in this presentation, you know, never wrong, just early. Okay. So I want to avoid that at all costs. I want to be as conservative as I can be. What I would look to do on something like this is try to get it up at my 618. And for a lot of reasons. One, there's likely to be a lot of turnarounds at that price level. I'll find those here in a second. But the most important reason is the risk reward that's possible from that level. Okay, so our extension level below, should we turn around at our 618, is all the way down at, you know, just under 91 cents. Okay, where I can put my stop loss and feel really good about it, I mean really comfortable with it, would be right outside of this AB boundary. Because then if the market digs, it turns around at, I've got 2 more major Fibonacci levels above where I plan to enter that might protect me. You know, and my most recent AB boundary, the saying is that if you haven't broken your A, you are still in play. Okay, that's what that whole saying is about. If we break this A level above, I'll zoom in so you guys can see this A that's here. This little black circle has an A in it. Okay, if we don't break our A, we are still in play, and that means that the market's moving according to plan. Okay, so I think that we see a little bit of a bull trap here. We break a couple of recent highs in this oversold looking area. So we fulfill all of that demand, and then I think the market continues downward. I don't necessarily know that for sure. That's just what I think is happening. And it doesn't always matter what I think. It matters if I can back it up and manage my risk. Okay, so let's go ahead and get this. Get a picture of this here. Risk reward looks amazing. Okay, so I'm not overly concerned about that, to say the least. Let's go ahead and measure this up. We've got 122 pip risk for a 360 pip opportunity. Let's go ahead and get that punched in. There's 123.60. This is a 3-to-1 opportunity. This is exactly what I want to find all the time. Thank you, Sam, for the heads up and the call and the Aussie CAD. But at this point, I just need to know how much money am I risking. Okay, so I made a little mistake earlier here. I multiplied by 10 incorrectly. But 0.01, okay, 0.01 times 10 is 0.1. Okay, so 0.1 times 120, this is a $12 risk from a 0.01. Okay, as far as you know, if I wanted to raise my risk, okay, if I want to risk, say, $50 on something like this, I might do a 0.04, okay, because 40% of 120 is roughly $50. So I want to get as close to the same amount of money on every decision that I make, no matter how big the trade is, because then I can manage my win rate a little bit more easily. And then I can know things like, okay, if I win half the time, I'm going to be profitable. And that's really the most important thing, is that if I know I can win half the time and be profitable, then I don't have to be a great trader. I can still make money. I'm not going to blow out my account. That's really the whole idea, is to build wealth over time. If I protect myself and I never give away all of my money on one decision that I made that's way bigger than all of my other decisions, then, I can live to trade another day. And we've been doing that in here all year. And the truth of the matter is that that's the most overlooked part of trading. If I want to stick with the same size trades that we've been looking for, actually, I would actually need to set this up as a pending order, because we are looking to get in at a higher price. This is a pending sell here. And to get my rate value of 0.9444, stop, limit, and then this is where I put in my 120, 360, 3 to 1. Pending sell order, place, okie dokie. All right, let's move on here. USD CAD's been a popular one for quite some time. I think everybody and their mother has been trying to buy this thing for a long time. So let's go ahead and take a look at it real quick. May take a look at silver also before we get done here. And we're going to go to the monthly first. I want to make sure everybody understands, top to bottom what we're looking at here. Crunch this thing down, 10,000 foot perspective. I want the whole world in my hands. I'm going to say stupid things like that all the time so that you remember this in your trading, because that's really what did it for me. People telling me, yeah, you want to trade from the right side of the trend line. As ridiculous as stuff like that sounds, it really does help. Okay, so this is our outer trend. This is really an inner trend. Really, our longer term trend on this USD CAD is this. Okay, this looks similar to the Aussie CAD, very kind of, on the outside at least, as far as the boundaries go, where the market, gets divorced and says goodbye for 10 years. But I'll be back to love you again soon, in a decade. So I think we're moving down towards this lower inner trend line. We had another inner trend line as well here, and that one broke. That was the trend for years. Broke heavily. So I think we're headed towards our outer trend line on the bottom, and I think that might really be where this thing ends up. Okay, I think we end up down there. Okay, so I don't see any reason on earth, at least lately, why this would stop, unless somehow the U.S. government totally changes its policy, and I just don't see that happening, because it seems like they are going, well, they're doubling down is what it seems like to me. So I'm going to go to the weekly time frame. There's a lot of people that think that the the ransomware attacks are the government, but I don't think so. Although that would be so U.S. government of us to do, but that's okay. I don't necessarily believe that that's the case. I just think it's funny that people do. So here's our trend line in the more recent terms. Okay, we are under that. Okay, so if I wanted to start looking for buys all the time and think this is an uptrend, I'd want to be on the right side of this trend line. Okay, so this is where the right side is over here. We're not over there. Okay, so I'm still looking for places to sell. Okay, I still think that this is a predominantly bearish market. As much as it may look oversold, the government is doing what the government wants right now, and they are the people that control this. When I say the government, I mean the government, the central banks. A lot of times they're going to work in unison. Sometimes they're going to work against each other. Depends on who the president is. But the reality of the situation is this has been a downtrend for a long time. No question. I mean, this is the price up here at the top. This happened in March of last year. Price right now is over 2,000 pips below. So I think down. Let's work down to our daily chart. And this is where it starts to get fun, where we can start to find opportunities. And we have not quite yet made it to our extension level below. Okay, so if I was going to look for a short-term buy opportunity, and that actually might just be what we planned for in here today, because I think we are already short and aiming at this price. I may look to buy at this 119.5 price, because that's where our extension is, and we haven't gotten there yet. Okay, so I may scalp there. And when I say scalp, I think that it's going to be a very heavy level, so I'm not going to stay in it for a long time. I'm going to get in it, try to get out at a recent high, and be done with it relatively quickly. Okay, so I may just do something like a 5100 down here. Let's come down to our 4-hour time frame. Because if this thing pops down and hits my extension, okay, maybe I do a 100, 200, really kind of figures out, I need to figure out where my resistance levels are. And this is the range trade that I'm showing you guys right now. It's a little bit of a different strategy. I know there's a lot of strategies out there. You guys probably see 4 different ones from me every week, because I trade with the trend, against the trend. I guess we probably do more than 4 in here a week when we really get down to it. But let's go ahead and get in our smart support and resistance on here. Smart resistance is really what I want, because that's the resistance is what I'm going to use to aim upward. So I want to see if this makes sense. Okay, I'm going to measure all this stuff first, but from my blue line where I expect my extension to hit, it's 133 pips to my resistance level above my closest level of resistance. Okay, so I could really risk something like 65 pips and try to get in as a buyer at that lower low. Maybe we pull a quick Fibonacci from this recent high and look to see where that extension level is. If we want to be a little bit more, conservative, how far away is this little fib level from our price? 38 pips. So I may really like this opportunity with a 65 pip risk and 130 pip opportunity. So I'm going to show you guys what that looks like. Okay, my stop loss, I'm going to put it below this lower time frame extension level, and I'm going to put my green level. Okay, this is where we would be going counter trend. This is where I'd be looking for the bounce. Okay, so this would be the counter trend plan that I have, and this is a relatively short-term trade. This is something that could happen in a day once it actually enters. I'm assuming that it's going to enter because this has been a downtrend for a long time. So I'm just waiting until the downtrend scores their point. I'm going to try to take a little bit of a win off of them and then be done with it. I'm already in as a seller. Okay, so those of you that don't necessarily understand how this works, you can do both. So I can leave this sell opportunity going. So if the market goes against me and I lose, whatever, I'm just going to zero myself out for a while. Who cares? So that being said, I'm all sorts of interested in trying to pump myself up in a situation where I'm not really taking a whole lot of risk. I'm kind of just going to plan to hedge myself once we get to this critical price level below, and really not a massive risk if we're already in the other direction. Okay, so if I go ahead and put in the same lot size, I'm literally going to zero myself out. This is a pending position, 119.53. Okay, and then a 65 pip risk, 130 pip opportunity. And then this is a pending buy order, actually. 119.53, 65, 130, place. Okay. Perfect. So, at this point, we have exhausted all of what we wanted to look at here today. We've got an obnoxious pip number that we're looking down here with Bitcoin continuing to fall. And I think actually we wanted to show one more here. I wanted silver. And this is actually AUD USD in Smart Trader. Silver's been a fun one. I think everybody has been long in this for a long time. When I say everybody, I mean retail traders are long. I think something like 90% of them. You guys can see, you can get an idea for sentiment and who's buying and who's selling stuff on this daily FX page. And I'll show this to you guys real quick before we get done here. Put this in the chat box. Okay, but if you want to know what other traders are thinking, this is all of this broker's people from all over the world, hundreds of thousands of traders. Okay, so if I know that, out of the 185,000 people or so that trade with this broker, if I know that, I don't know, 76% of people are buying the USD CAD, I might bet against those people just because the majority of traders lose. But the other thing that tells me is that this is probably at a critical price level that the market is going to make a decision. So there's probably going to be movement here soon. That's usually what this means, is that there's been some consolidation. Traders have taken notice and they're expecting a breakout to happen soon. And a lot of them are looking upward. We're going to do that in a short burst, but we're really going to hopefully do it, after market falls a little bit more. But silver is also on this list. Well, here's gold. I guess where is silver? I know silver was on this list. Gold is 78% buyers. Maybe they're not allowing you to see silver anymore. Silver was on here at 90% buyers for a considerable period of time. And I guess they're not sharing that information anymore. Everybody's buying silver. Gold, they are 78%. So if 78% of people are buying gold, I'm going to feel pretty good about silver also, especially when I know that the CFTC is releasing data telling me that the hedge funds are long. So let's actually draw some long-term analysis on here first. Okay, so first things first, let's get some outer trend on here. Where are my divorce lines at? Okay, so this is where the market picks up, leaves, and doesn't want to come back. Okay, this $12 price, I would be very surprised if we ever got anywhere close to something like that ever again. Okay, so our current trend, okay, this was our trend for the years after, the crash happened and all that stuff. And the market recovered. Okay, this is from 2008 to 2016, and then the market went sideways. We started ramping up electric vehicles, batteries, solar panels, a lot of things that use the crap out of silver. Okay, silver demand has never been higher, ever. Demand has never been higher, but the price has been. If you guys see this, gold hit a new all-time high months ago. Gold hit, $2,000. That's the equivalent of silver going to $51. It hasn't done that yet. I think that we are still yet to see something like that. And, Robert Kiyosaki's on my side from Rich Dad Poor Dad. Mike Maloney, there's a number of analysts that have been calling for, really, really, really bullish silver for a very long time. Okay, so our trend here, just to show you guys what I think is going on, and actually let's come down to a daily. There's a, potentially, looks like might be an excellent time. I'm going to show you guys a pattern that I actually read about this in a book. It's called The Law of Vibration. And I think it's by Tony Plummer is the guy that wrote the book. It's about the theories of William Gann, W.D. Gann. And Gann did a lot of work on Fibonacci's, and he was a big pattern trader and one of the most famous traders of all time. One of what he was talking about is this little bump here, okay? This is kind of a loose drawing of what he was looking for, but this is really the pattern that Gann was looking for all the time, okay? So this might be something like that, okay? As ugly as that looked, okay? It's basically a small hump on the left, a big hump in the middle, small hump on the right, bigger hump to the right of that. This would be what we're looking for. If you guys want to get a better idea of what this pattern actually looks like, because the market is going to distort and it's going to spread and it's going to get wide and it's not going to be as easy to see this stuff unless you know what you're looking for. That book is great. I'll type his name in here. I'll just type the name of this book in here. Law of Vibration. I'm not selling this book. I just read it and I really liked it. I read it in a day. And I don't know, I guess that makes me a big dork, but I don't care. I thought it was neat. But I think that we're looking at a big Gann vibration here. It's taken a very long time for it to happen. A lot of times Gann vibrations are going to happen after a big bullish rally or a big bearish, just dump. So I think it's the perfect time for it. I think this thing continues to rise. I think a lot of people are thinking that this is going to come down. I don't believe that. Okay, and here's one reason why. Let's go ahead and get a fib level on here, actually. Got a lot of reasons why. We're going to show all those. Okay, so we haven't hit our extension yet on our daily time frame. That's one reason, and that level is actually all the way up here. Okay, 31,948, so 32 bucks, give or take. Haven't hit it yet. I think this thing has legs to 51. Reality is that I think that silver's actually got legs to considerably higher prices than 51. But if we're going to stay on Earth for a while, then I'm going to be a little bit more conservative than that. I think $32 is a great place to aim. I need to know if I can manage my risk. Let's go ahead and get a blue line on here at our current market price so we can get a little bit more perspective on what this trade opportunity might be. Okay, so we have nosed. Here's another reason why I think that this is still bullish. Okay, I'll go ahead and circle a couple of highs here. So here's a high on the left. Okay, here's a higher one right here. Okay, so not a whole lot higher, but that does make me bullish because we did break that high. I'm not quite as bullish as I may have been otherwise, but let's come down to our lower time frame. Let's come down to our 4 hour. Okay, and let's get a trend line on here. I want to look for the pattern that's been happening. Okay, so a lot of traders are going to do this, and they're going to say, oh, right now is the time to sell it. Maybe it is. Okay, I'm going to look at the pattern first before I do that, because this could come down a little bit, in which case, well, I want to be ready for that. I may not want to load into it more. I may want to take profit on some of the open trades that I have. So let's figure out what's been going on here with the rest of these trend lines on this move up here, because the last time we broke down here below, okay, the market went up. Okay, and then we had another breakdown here below, and the market went up. Okay, so I think that could happen to us again for the 4th time, because that's what the market's been doing to us. So that's what this trend line has meant when we broke it. So that's really what it is. You need to figure out the meaning behind what you're drawing. And you have to understand what the meaning is. It's really about finding the pattern of what's going on. So here's a break. Okay, this was the new line. It broke, the market went up. Okay, so maybe it's time for this thing to make a turn. I don't know. Okay, but that being said, if it is going to make a turn, it could be right now. Okay, so if I think that this is the high price, I want to figure out how I can be conservative and where I would have to get in to do that. Okay, so I'm going to just assume that this is the wave, because we've already got a lower high on the right side of this one that I drew here. This high over here is slightly lower. Okay, so that being the case, this does kind of tell me that this might come back against me a little bit, at least in the short run. We did come back to our 236. We haven't made it to our 382, Richard. That one's for you. The conservative place to get in is all the way down here at 25.7. Okay, that is the most conservative place to get in. As far as if you're still bullish on this, that is. That price is extremely impactful. There's a very good chance that the market gets there. And, you know, really the best opportunity, the highest probability is this 382. Okay, so I'm definitely a buyer at the 618. But other than that, I might be a seller until we get to this 382 level here. Okay, so I'm going to change this blue line into a green one, because this might actually be our short-term hedge, because we are in as a buyer already. And if I think the market's going to come against us a little bit, then I may, well, I've got 2 opportunities open already. So I may close one of them. The one that's in profit, hey, let's take some money from the market. Okay. And let's look for a short-term scalp here. Okay, so let's come down to our 1 hour. Okay, so we're going to aim at this 382 level. The market has turned around there before. We've got this little trend line that's kind of forming now. This might be the time to do this. Literally right now. Okay, so I'm going to go ahead and get a blue line on here. Current market price. I need a previous high to protect myself. That may be the trade right then and there. Okay, this might be the short-term move that I look for on silver. I just took a little bit of profit. We are testing the backside of this trend line. The market hasn't really made it back to my 382, so we are 80% to this line down here, which, well, let's just say I'm a big fan, you know, of the counter trend move. You're not going to trade. You're not going to try to trade it all the way down to where you'd want to be a buyer again. I'm going to delete these circles here because we don't need these anymore. I may make it a little bit more obvious what they were actually. Let's just make them smaller. Okay. Cool. So now let's get a picture of this thing. And if you guys want to place a trade on silver and Smart Trader, you can. It is going to say non-tradable instrument when you come here. Okay, so this is a market order that we're looking at. Okay, this is another thing you're going to want to gear down your lot size for. So if you've never traded silver before, you may want to do this on a demo account before you try it in a live account. But this is a fun one to trade. There's lots of movement on it, so I'm a big fan. If you want to trade it, though, you do have to scroll down here. I think it is #silver. So let's find it. You can also trade this from MetaTrader 4. If you guys aren't familiar with MetaTrader 4 and how to use that platform, actually I think it is easier to trade silver from there, but it is just straight silver in here. So I'll click on it. Now I can trade this instrument from Smart Trader. Now I just need to put in my exits, entries, okay, my stop. Okay, I want to go ahead and put in my price here, 28.282. And my limit, 26.84. Okay, and now I can go ahead and click sell right now, and we're in like Flynn. So we are now hedged because I have 2 positions open on silver in each direction. We just took profit on one. We took profit on another silver position last week. We've been kind of working silver for, well, let's just say probably the last 6 or 8 months, because even if we went in the mud, we were able to dig out. It's been really fun to trade silver lately, and I think it's going to continue to be that way for a long time, just because, well, there's a lot of forces pushing the market down. There's a lot of forces trying to push it up. The hedge funds are looking up. People like you and me are looking up. The institutions are looking down because they want their production costs to be lower. So been a really, really fun year to watch. I think that battle is going to end in a bloodbath for more than likely the producers, I think, the way that things are going. But those of you that have not been to our website and checked out any of the YouTube videos that are on it, or any of the other things that you guys can get for free, you guys would be crazy not to go check this stuff out. YouTube channel, all that stuff is going to immediately get uploaded in here. So if we make a new video, they are here. You can scroll through. This is a gallery on the bottom. So if you want to learn how MetaTrader 4 works, for example, we have a video for that. And you could learn pretty much everything you want to know about using MetaTrader 4 and placing trades in this and that platform from this video. If you want to know more about Smart Trader, all the buttons I use, how I do all this stuff, why I'm doing everything, I made a 1,000 pip call on the pound yen in this Smart Trader tutorial walkthrough video. So if you want to know how to use all the tools and watch it on one of my brightest days, where I made some really amazing analysis that actually worked out pretty well. 1,000 pip move is pretty awesome. It took 4 months for that to hit, but it did go pretty much straight there. You can go watch the video and find out. There's more videos on here as well. So if you want to know more about the basics of the market, who I think controls the market, that type of stuff, we have videos for that. Those of you that want to track your results, you want to keep a MyFX book for yourself, I strongly recommend that. This video here will walk you through the whole process in 15 minutes, and you can know what your win rate is and your loss rate, all that other fun stuff. So by all means, if you haven't been here, check this out. I'm going to put this link in the chat box again. And this should be posted on YouTube here later today. I'll try to get the recording out. I'm going to take the trade ideas that we came up with and post those in Discord and Facebook right away. But we are out of time for this morning. Appreciate everybody coming out. Always a pleasure. This is my one of my favorite parts of this job. I think, well, the Friday sessions are always fun because you can always play Monday morning quarterback on everything that happened all week. So I'm very excited about the way things are going. We're in great position in a lot of different trades. There's tons of movement coming. If you guys need more assistance with things, you guys can't figure out, how to get something hooked up, let us know. Because if you're having a rough time with something, then go to the Facebook channel and say, hey, Will, can you show me more about how to do X? And we will do it for you. If you watch this on YouTube later, write it in the comments if you have a question. I'm going to know if that happens. So the reason why these exist really is just to help you guys. Okay, I could do all this analysis by myself. I promise it would be just as effective for me. I don't necessarily have to do it with you guys. It's so that I can help you get to the next level. But that being said, it is time for the weekend for me, folks. You guys have a great rest of your day. Enjoy your weekend, and we will see you next week. You guys be good or be good at it. Take care, folks.